Yeah, the week has come to an end. I just want to review our logic, especially to build confidence and conviction. In the last session, the one we hosted, I think on Tuesday, where I was explaining a specific simple trade model. Okay, I don't know if anyone was here. This is what you guys have currently. This is the expert advisor you guys have currently that will do the analysis for you and tell you which buyers to trade. And the other model, yes, I was explaining a specific model on London equities open. So that model, I have successfully almost finished of coding it into an expert advisor. So that model is automated. All you have to do is to download the automation, run it in your system, and simple. So this one, almost good news. It can execute trade and control risk already. The version I have, the point I've created it up to. Remember the last time when I was explaining for the equities open, we said if you see a high volume candle toward your direction, then you enter. If you don't see, that means there is no strong momentum. So that is confirmation. That high volume candle you see toward your direction, that is confirmation. So in this case, this is, for example, the equities open candle. This is 9:59. This is 10 a.m. candle. So you see a big candle going toward the bullish direction. You know that is your sign to enter, and this is the result through the course of the session. So that is the confirmation logic. So everything here is just like I explained it. So if you want to use that confirmation logic, this is it. You enable it. True. But if you don't want to use it, you just want to enter immediately the 9 o'clock according to the bias, then you set it to false. Me, I prefer not to use confirmation because I can already control my risk. Then this one, enable trailing stop based on risk to reward. So for example, if you're in a trade of 1:1, let's say a trade of 1:2, if you enable that trailing stop, by the time your trade gets to 1:1, it will set the trade to break even 1:2. So the concept is just for you to be able to lock in profits. So you don't make profits and retrace all the profit back to the market once you hit reasonable milestone automatically. Then you can still manage your trades. You can work side by side with the automation and manage your trade. And this is the similar function in the other EA. So this one is not in enum, so that the EA will be lighter and function faster, because the other one is very slow. But that is like the first model of this series of EA we have created so far. So this one is way faster. It's the same thing, used within the range of, I'm going to clarify that clearly. So is within the range of 1 to 10 days. So it depends on your system capacity to be able to run a lot of analysis. And I think there is still limitations of the number of candles that can be analyzed by MetaQuote itself. So that is that. This is test chart size. Something to adjust test size. Then this is markup color. Yeah, so this is you to idea. So for example, you can see the markup. Somebody who wants to use a white background, blah, 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 customize according to your taste. So for example, I can change the markup color from white to any color of my choice. So let's say, let me change it to yellow, for example, and see everything changed to yellow. So that is that function. It is just to change colors. Then the next one, the risk per trade. So same thing, this is no lot size. If you define the risk, it will calculate the appropriate lot size for that specific risk. So let's say this demo account of 8,000 and I want to risk 10%. If I impute 10% here, you see that the lot size it will enter during the trade will have a stop loss that is equivalent to $814 because that is 10% of whatever is here. And then the risk to reward ratio. This is what you use to target your take profits. So for example, if you're targeting 1 to 10, and then it sets a take profit that is times 10 your risk. So scenario where you can use maybe extensive take profit like that is especially when you enable the trailing stop. So you know it might not easily hit the 1 to 10, but once it hits a significant milestone 1 to 1, start trailing the position for you. And then this time adjustment is according to the broker we are using. So we can use this for cases of daylight saving time, which is going to happen by March 9. We'll just come here and adjust the input to the newest input that will suit the correct time. And this is also to solve the issue with the time difference with broker and all. That's okay, so far so good. This is what we have For the equities open, which I taught on Tuesday, so just like I explained, we have automated it, and it is very simple to use. As you guys can see, you can define your risk properly. So this is not the case of I no set stop loss or I lose more than I accounted for, stuff like that. So it's very simple. It's becoming simpler for us day by day. All right, so let's just test the logic. If you were in the last session, you already understand the logic that we're leveraging on equities open. So for London equities open, the assets to trade are DE30Z and UK100. Take note, just these two assets when you want to trade the London equities. The London equities is 9 a.m. Nigerian time, 8 a.m. New York time, 10 a.m. our broker time. This broker time is 1 hour ahead. So 10 a.m. the broker time is 9 a.m. Nigeria time. So look at it here. You see my time here. So this is 10 a.m. the broker time. This is 9 a.m. Nigerian time, and this is 8 a.m. New York time. So it is already set. Once you drag it to the platform, you don't have to be confused about it. And since most of the things are automated, but let us review the logic, because yes, this session is we're doing review of our logics at this point. So we'll review this one and we'll review the other one. So this is the course of this whole week. And this is the setup it gave us on Monday for the equities open. So the equities open trade, we're supposed to run it from around 9 a.m. Nigerian time to 11 a.m. Nigerian time, 12 a.m. Nigerian time, yes, because the equities open run from 8 a.m. to 11 a.m. Yeah, our area of focus runs from 8 a.m. to 11 a.m. London time. So that means our 9 a.m. to 12 a.m. Nigerian time. So you either hit your take profit target within that time, or if you don't hit your take profit target, you're still running your trade, ensure to close it by 11 a.m. because after then, we'll be looking at New York equities open and news drivers from New York, which can change the dynamics of the market, can retrace your whole profit or anything. So just like we do with this other EA, where we have window of entry opportunity, the green box is where you're supposed to trade. It is still the same thing. This one, the green box is where you're supposed to make your entry. While this one, that specific time zone is where you are supposed to enter and exit your trade. So the entry is exactly 9 a.m. Nigerian time. So it's not like this one where you have to wait, find your signature entry. This one, the entry is exactly 9 a.m. Nigerian time. And the whole logic is already programmed. So I'm not sure there will be a lot of confusions around it. Fine. So this is 11, this is the point where we're supposed to exit. Fine. So you're not supposed to hold your trade more than this. So within here, you must have framed your risk to reward everything already. So this is the point you should not exceed with the trade. It will be spelled out on the EA as London AM close. So when that time reaches, there will be a notification, and make sure you scale out of all your trades, because we'll be anticipating session change and price dynamics change. So on Monday, this is what we had. Let us look at what was here realistically in terms of PNL. This is the entry. If you're using non-confirmation, you'll be entering exactly at the open, prior to the open of the 10 a.m. candle. So that means, yeah, that's 10 seconds prior to the open of the 10 a.m. candle. So that will place you appropriately around the open of the 10 a.m. candle. And the stop loss will be the volume of the 10 a.m. candle times 1.6. That is almost double of the range, but not up to double of the range. So let us measure and see. So this volume here is 114 points, 114. So 114 times 1.6 will be about 182 points, which is the range of the stop loss. And the profits, this is 246 points, almost running up to 1:2 there. And the highest point we got to within the session was here, 320 points. So this is The stop loss was 182 points. Maximum points we got to 320. So for Monday, we had the possibility of making almost times 2 of the risk amount. Almost times 2 of the risk amount. So this is the whatever on Monday. So it depends on your risks that will determine your PNL. So by default, yes, by default, what we have programmed is this 10 a.m. candle times 1.6 of the range as your stop loss. Institution inject liquidity here. As long as the liquidity was injected strong enough, then this level is not easily going to be tested until the London AM close. So on Monday is a day of consolidation if we go by the concept of accumulation, manipulation, distribution in the weekly template. So Monday is not the day to expect the most volatility. And as you can see, the reaction was still good. The trade was profitable, but it was not the strongest reaction. So that was on Monday. So on Monday, it gave a buy bias according to our logic, and you can see the buys. If you enter, you'll be profitable. You make money from this trade. Very simple. Now let's go to Tuesday. Let's see the projected bias according to this logic as well. So on Tuesday, it projected a buy bias as well. Hope you guys can see the text. Buy, reaction anticipated. And this is the LSE open, which is the London Stock Exchange open. That is the 10 a.m. candle. This is it here. So Tuesday had very good volatility. And as you can see, just like I explained in the previous one, if real liquidity, heavy liquidity was injected, we're not going to be testing these lows until the end of the London AM session. And that is what we saw here. So this is a no drawdown trade, ahead, straight up. So according to this logic of the trade, according to the logic we use for trading the LSE open, it predicted a buy bias, and we can see the buy reaction. It was correct. So if we factor in, let us factor in the potential risk to reward on this. So the range for this stop loss, 10 a.m., that will be here to here, that's 88. So 88 times 2, that's 176. And the maximum point we ran to within the session was 738. It was times 4 of any amount you risked. So this is $100 to $400, $10 to $40, blah, 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 by just using this simple logic. And it had no drawdown on Tuesday, straight ahead from the equities open. Take note, I'm using UK 100 or the 30. You can analyze both side by side and trade both. So you can spread your risk across both. So for example, if you want to risk $100, you can risk 50 in one, risk 50 in the other one. Both of them are similar assets. So sometimes one will react more than one. But from my observation trading this week so far, something I've observed is the UK 100 most of the days had better reaction than the DE 30. So this is on Tuesday. So Monday bias was correct, offered almost 1:2. That means almost double of the risk. Then Tuesday offered potential for times 4 of the risk, times 4.3 of the risk profits. Then let's check the one for Wednesday. The logic for Wednesday. Wednesday gave a buy bias as well, buy reaction anticipated as well. And let us project the risk and the reward. So this is the 10 a.m. candle. 10 a.m. candle, this is the range of the 10 a.m. candle. 10 a.m. candle is 129 points. So the stop loss will be 129 times 1.6. That will be 206 points. 206 points, somewhere around there. And the maximum we got to within the range was 301. So that is about 1.5 of the risk amount. So you risk $100, you make $150 profit. That is the setup that was here. This stop loss was not hit. Take note, the stop loss we calculated was 206 points. So if we draw 206 from the entry, which is here, 206 is way below here. Fine. So that is that, about that. Next. So Wednesday bias. Yeah, that was Wednesday bias. It was correct as well. That is 3 out of 3 so far. And Thursday bias. Thursday, what did Thursday give us? Thursday give us a buy bias as well. Thursday was yesterday, which I think most of us, a few of us traded, and many people traded as well, and they all had the results. A lot of us did up to ×4 from yesterday. We did not catch the whole range, but let us look at the potential from yesterday. So this, okay, this thing candle here, let me zoom it in. More zoom. It was yesterday, and the range 67. So multiplying 66 times 1.6, that will give us 105 point stop loss for yesterday. And what did yesterday run to? 105. The maximum yesterday was 576 points. Yesterday did maximum of ×5. So this is $100 to $500 maximum potential. So it's not necessary that you'll be able to catch the maximum range. You can frame your trade any amount you want to make within the range. So for some people, they exited 1 to 2. Me, I personally exited 1 to 4. So it depends, but this is the maximum potential that was offered. And you can see the bias, it was correct as well. You can see the protected lows actually being protected. This one was mitigated, but was not necessarily violated. Even if it was violated, did not trigger our stop loss, and you can see the whole potential. So that is 4 out of 4 days. The equities open bias, according to our logic, was correct. And the last one, this is Friday, which is today. And what did it offer today? This is it. It's offered a buy trade as well. You can see it. Just in case you cannot see the text, let me drag it out. So buy reaction anticipated, and this is the time for the buy reaction. And this is it. This is the 10 a.m. candle. So the 10 a.m. candle range was 133. So 133 multiplied by 1.6. That will give us 212 point stop loss. And the maximum potential we got up to within the range was 841. 841. And the risk was 212. So that's almost ×8. ×4 today again. Same thing, $100 to $400, $10 to $40, $1,000 to $4,000. This is the potential that was here, the maximum potential. It's possible you could have leveraged on 1 to 2, 1 to 3, 1 to anything, but this is it. So far, so good. Our LSE, that means our London Stock Exchange Open Logic on the 30 and UK 100 had 100% strike rates this week. So, and we can see the profit potential, it is massive. Other than Monday, every other day did around ×4. Every other day did around ×4. So hope we have a good week like this week, next week as well. Then the other EA, which is already available with you guys, let us review how it performed this week. It's Tuesday, D4, Monday, D1. So on Monday, yes, this EA, just like we explained the other time, we use it on US equities. Works best on US equities because the whole setup of the time to trade is around the US equities open to the anticipated reaction of that section. Take note, the trade is not for US equities open bias, but it is for the session bias. So take note. So that is why it will not detect bias for you and you just enter. Rather, it will detect bias for you and you find your entry. So on Monday, it gave no bias, no trade. It said ambiguous bias detected. So there is no buy or sell opportunity. There was both. So no need to trade, pass. Then on Tuesday, it detected a buy bias. Buy bias detected on Tuesday. Your work as a trader will be to find your entry once it detects the bias for you. So this is Tuesday. Find your entry. How can you possibly find your entry? Depends on your trading strategy. So for example, the one I recommend the most, which is a liquidity sweep, and then you look for a bullish PDRA to leverage on. So insert this, like something here. Fine. So this is a liquidity sweep here. Here, this low was taken, the London low, and this low here was taken as well within this section. And after it was taken, what happened next? We had this fair value gap still within the session. So we had this fair value gap here, come back here, inducement. And once you see an inducement move like this, please go and do your own research on how to trade all these patterns. So focus on entry patterns. So this EA give you the bias, focus on improving your entry pattern. Well, let me review this one. So this one, there is this impulsive move after liquidity sweep, and then there was this fair value gap mitigated, price traded into it, serving as an inducement move, and then price traded back into another block. That becomes your entry. Validation, another setup here again. So after price reacted from this, we had another one here, fair value gap entry. So two possible entry opportunities, and this is the bullish reaction. So this day was a winning day, offered you the entry within this section, and this is the continuation. So reasonable risk to reward as well. Let's just look at this one. So this one with the stop loss of 15,000 points, and maximum profit target got to was 37,000. So that is above times 2. That's above times 2 of the risk that was taken. So that means $100 risk yielding over $200 profit. So that is for on Tuesday, which is detected bias for. And then on Wednesday, detected a sell bias, and we can see it had a sell reaction. So your work again as a trader, look for your sell entries. Look for your sell entries. Something, anything, according to your own entry logic. So very fair value gap here, the same thing. This one is almost out of the session already. It could even be trend line or anything for your entries, and we can see the sell reaction. Liquidity sweep, look for your entry, sell reaction, perfect. So this one was another one as well. Good outcome and all of those. And then this day, the bias was a sell bias, detected a sell bias. Which day is this? This is on Thursday, which is yesterday. So yesterday, it detected a sell bias. Liquidity swept already, then you look for sell signatures. So if you detect a sell bias and market is going bullish, no problem. Just wait for your sell signature. You don't see bias detected and just enter the trade. You don't see bias detected and enter the trade. You wait for confirmation. So what are some examples of confirmation? I'm just sticking to the 5-minute time frame based on how slow this EA is to mark up, so I don't do a lot of switching between the time frame and waiting. Or you can navigate between more time frame and even see more entries. Within this time, you can even be in trading view to spot different time frame, 1 minute, 2 minutes, and spot your entry pattern, all of those. Fine. So in this case, we had this one. We had this bearish fair value gap, price traded back into it, blah, blah, blah. That could be your entry. For people trading trend lines, they could see a trend line break, something easy. That could be your entry as well. So it all depends on your entry technique. And any entry technique toward the direction of the bias will offer you reasonable probability for you to be right. So it's not necessary that it must be liquidity, this, that, or any of the terms I'm explaining. Just make sure you have a reasonable entry model. We've already picked the bias for you. Just make sure you have reasonable entry model. And as you can see, this is the sell reaction, very reasonable. With proper framing of risk to reward you, this is large. Actually, you can even do ×4, ×5 out of this range, ×10 possible, because this range is actually very extensive. And then the next day, which is today, yeah, not the next day, today, this is today's setup. By this time, it's offered a sell bias. And this is it. You can see me marking it up already on my chart because this was today's trade. So what was the anything, everything here? As you can see, price has already taken out the highs here. Liquidity has been swept multiple times. And then this point, there was a break in market structure. Sorry, this is not break in market structure. Market structure shifts. signaling reversal. After the market structure shift, what happened? Price created this high in lower time frame. This is more like an inducement move. So after this high, what will you be looking at for? Something like an order block for your entry. This is an order block here, bearish candle. Doesn't matter. If you are trading trend line, you'll still be able to catch the move. So just focus your studies. If you're using this EA, focus your studies on entries, how to spot entries. Case closed. We already tell you the bias that is most probable according to this strategy. So as you can see, trend line people will be able to even catch it. This is a break of the trend line, retracement, you enter, or anyhow you choose to implement it. So far so good. How many days did we guys count that we saw that offered no profit opportunity? None. So for the course of this week, every single day offered profit making opportunity as well from the detected bias. So these tools, yeah, that is two. The two tools so far this week, they all did 100% job, like 100% strike rate. So it depends on your management, your psychology, and everything to determine the level of profit you would have made using this tool. Basically, this is what we have currently for the community. And as you all know, there are no charges attached to them. So when I use these things to make life easy for our own trading. All right, so let me entertain questions. Somebody is drawing over my screen. Please stop. All right, let's entertain questions from the comment boxes.